Hello everyone and welcome back to another video. Please do subscribe if you have not already. I really hope that you enjoyed this video and all the others that I have on my channel, whether it is other stock analysis videos or even I have some, other finance videos and automotive as well for those that are interested. So let's just get right into it. This one is a dumpster fire. This one is in the news all the time lately for all the wrong reasons. Over the summer, their CFO killed himself by jumping out of his penthouse New York apartment. It's a bad one. It's really going downhill. And, if you have any coupons or gift cards, you might want to use them up quick here because this one might not last as a company for much longer. This is Bed Bath & Beyond, as you can see. It is just an absolute dumpster fire. It's a school bus fire. It's just not very good. It's not a very good site. As you can see, the analysts all say strong sell. Out of 6 ratings, every single one is a sell, meaning it's a strong sell. They see the average price target being $1.36 for it. Right now it's $3.66, so that represents about almost a 63% downside from where we are right now, and it's just bad. This is not really one that you want to own, and even the stock analysis button. Let's see what we show here on tip ranks for what the smart score is. Remember, I usually say I don't invest in anything that's below a 7. And as far as Bed Bath & Beyond goes, it's a 1. It's just awful. There's really not much going on for it. If we look at the income statement on a quarterly basis, just to see what the most recent numbers look like, the most recent quarter for 2022 for them that ended on August 27th, they just keep seeing, revenue decline. Look at that, just consistent decline. Just not very good. And, they really don't make any money. They had a consolidated loss of negative 366 million, and just there's no positive numbers going back even the previous 5 quarters compared to the most recent quarter. And with that, even the balance sheet part of things, they have no cash. That's really bad. They have 135 million in cash. They are just million in cash. Remember, this was a mega billion-dollar company. This is not what you want to see from your company. So, they had a total current assets of 1.9 billion, total current liabilities of 1.8 billion. They're barely squeaking by. They're at a 1 for a ratio, and that's not what you want to see. That's not a very good current short-term position. They are so close to being negative and having less current assets than less current liabilities, meaning they aren't liquid and they are getting close to not being able to pay off whatever they owe in the short term. As far as long term debt goes, it looks like that's down. It's at 1.7 billion. Or sorry, that's up. That's been growing as well. So that's really not what you want to see either. At 1.7 billion. That's not very good. If we look at their income cash flow statement, again, we start with the negative 366 million, and we can see that they have issued more long-term debt, 350 million this quarter, 200 million last quarter, and they really don't make repayments. 800,000 is nothing, and they really don't buy back stock either. They were a little bit, it looks like, but really not much to show for it. So they're just really not going anywhere. Seriously, they just have awful financials, and these are the fundamentals for them. It's just not very good. The technicals, I'm sure, don't look very good either. If we were to look at a portfolio of Bed Bath & Beyond, if you had invested $10,000 from a 3-year span from 2020 to 2022, by the end of 2020, you would see, a 5% return. It was up to $10,543. But then things slowly start to go downhill. The meme stock mania really starts to die down, and inflation starts to pick up. So no one really wants to own Bed Bath & Beyond for the long term. So more people sell, and now you're, down from 10,543 to, about 8,600. So you've lost almost, 18% of your money in the next year. And then the year after that, for 2022, everything just falls apart, and you go from 10,500 to start to almost about 1,500 at the end. You've just lost 82% of your money off of the previous year, where you already had like a down year. So you're not looking very good, and it's not a very pretty sight to see. It's not like you're really expecting much from this company, and don't expect much basically from what I'm telling you. In this is not anything you should buy or really hold on to, in my opinion, and that's not worth much because I'm not certified. I'm not, any kind of advisor or anything like that. I don't give stock advice, but I'm just saying that in general, this company, not even the stock, this company is not one that you would want to own. If you see things like this, these kinds of numbers. And again, that's not advice at all. So hope you guys enjoy this video, and I will see you soon.